Welcome to Squawk Alley this morning. Joining us today, Venky Ganesan of Menlo Ventures. With us, as always, John Fort is here at Post 9. Kale is off today. If Squawk Alley, John, were built for any kind of day, it's today, given the news we got last night and the trifecta of tech news that is dominating the story today.
It's just amazing. We've been talking about top-line growth and how big a role the question of whether it was going to show up is going to play in earnings season, and these names absolutely delivered it. And I guess the question now is, how much of a separation are we seeing between some of these high growth names that have done well in the era of mobile and cloud and analytics and the others? Who belongs in which group?
Three big tech names, of course, near all-time highs. Amazon, Alphabet, which of course is formerly Google, hit new highs after quarterly results that beat estimates. And then Microsoft at 15-year highs. The cloud, as John says, a big focus in all three companies' results, helping to boost revenues. Venky, we've been asking people to choose one story or a pair of stories that you think is more important than another. How do you choose on a day like today?
Well, it's very hard, but I got to tell you, the earnings yesterday showed that the money is in the cloud, and Microsoft, Amazon, and Google showed you the money. Paradoxically, in the same week, we have EMC and Dell merging and IBM coming out with bad earnings. So you can see that we know the who's, the haves, and the have-nots in the big tech world.
Well, but Venky, I wonder what happens next is the question, because there's still this tussle, I think, going on to figure out where the profitability is going to be in the cloud era. It's one thing to have scale, as Amazon and Microsoft clearly do in cloud infrastructure. But when you look 3 years from now, where's the big profit going to be? It's probably not going to be in just the raw infrastructure, right? It's going to be in applications laying on top of that, perhaps in certain components. If Dell and EMC, right, can get the right kind of storage technology that these folks are going to need to buy to power these clouds, maybe there's some profit to be had for them, no?
I agree with you, John. I think the big changes, you have to think about the public cloud and the private cloud. The public cloud war is over. I think it's Amazon, Google, Microsoft. That gets all the news, but it may not be where all the profits are. The private cloud and the hybrid cloud, which is where the enterprises move all their workloads from data centers to the cloud, that's where the big profits are going to come, and that's where the real damage will be done. And I think when you see eventually what happens is that I think the only companies who are successful and make a lot of money are the ones who can also win in private cloud, and that's where the real battle will take place.
Yeah, interesting. You talked, of course, to AWS not too long ago, John. Today, Microsoft adds $40 billion in market cap. CRM's total market cap is 50. I mean, they almost added a whole Salesforce today.
Yeah, and they've been talking maybe they would actually add Salesforce itself, and perhaps this makes the case for cloud scale. I did talk to Andy Jassy, who is the head of Amazon Web Services, about just how big the playing field is going to be in terms of competitors in cloud. Take a listen to what he said. Go.
This is a business, when you're talking about infrastructure technology, that is very capital intensive. And I don't think there'll be only one successful player, because if you look at the market segments, this touches infrastructure, software, hardware, and data center services. That's trillions of dollars globally. So there'll be more than one successful player, but there aren't going to be 20. It's going to be a small number.
And exactly who those players are going to be is a question that should be on every investor's mind. HP just dropped out of that public cloud infrastructure race. Oracle has been in it, but last quarter in their report they said that they're actually not going to keep ramping their capital spending. I'm going to be out at Oracle Open World next week, sitting down with Mark Hurd and Safra Catz here on Squawk Alley, and you better believe the cloud, the scale, these questions are going to be top of mind.
Yeah. Venky, how much of this is actual traction in the fundamentals of the business, and how much of it is the company simply willing to say more, right? I mean, AWS has been broken out for a couple of quarters. Google seems to be on the cusp of really telling us about individual units in ways they haven't. Is this just the street being faced with the empirical data for the first time?
No, I think it's AWS has hit a tipping point, and because they hit a tipping point, Jeff has decided to break down and show you the money and to show you the revenue. And I think the street is looking at that and realizing that this is a game changer. And remember, for Amazon, 30% gross margin is amazing. For people like IBM and Cisco and HP who are used to living in a 70% gross margin world, they're going to struggle. And every dollar that goes to the cloud from the data center actually becomes a quarter. And that's the problem that these large tech companies have, even Oracle is going to have, is how do they fight the way to the cloud? Because it is meaningful decline in their revenues and EPS.
Yeah. Of course, you got big round numbers. Google above 700, Amazon above 600. And then there's Facebook, stocks in triple digits for the first time, breaking 100, up 167% since the IPO in 2012. Meantime, Twitter CEO Jack Dorsey tweeting he's giving a third of his stock in the company, about 1%, to employees as part of the employee equity pool. He said, quote, "As for me, I'd rather have a smaller part of something big than a bigger part of something small. I'm confident we can make Twitter big." Venky, stock action on Twitter today, not all that impressive given the rally, having a hard time getting above 30. People want to know, it's a nice gesture, it's a charitable gesture, but does it move MAUs? Is that a fair question?
It's a fair question, but let me ask you, it's an amazing gesture. Jack has done a Jobs-like gesture. A lot of CEOs talk the talk, but he's also walking the walk. It will make a difference because what Jack is saying is people comes first at Twitter, and he's going to make sure that the best people show up there. And when the best people show up there, the product will show up and the engagement will show up. I think it's a pretty important symbolic move about Jack showing where his priorities are, and I commend him. I wish more CEOs did it.
John wrote this morning he thinks it's a sign that he's not going to sell.
Absolutely. I mean, if you were looking to put this on the block and you're Jack Dorsey with 3%, do you give up a third of your stake to employees? Absolutely not. It's a longer-term play. I would say it's a Steve Wozniak-like move. Jobs wasn't known for giving up his equity to a lot of people. That was Steve Wozniak who did that for Apple employees. But important if you are bullish long-term for Twitter. If you're an investor in the short term, I think this signals to you, look, Jack isn't going to do this and then go over to Google and beg them to buy it, because that wouldn't make a lot of sense. I believe what he's saying about building a long-term future for Twitter when he does something like this, more than if he had bought more stock.
Venky, we do have Twitter just at 30. I'm thinking back to the Morgan Stanley downgrade earlier this week where they argue pricing is already high relative to Facebook. The ad load's already high relative to Facebook. You've got timeline spent on mobile decelerating at an accelerating rate. Is the contest between Facebook and Twitter something to watch?
It is, but Twitter is at an inflection point, right? They've gotten a huge audience, but they're struggling to go over the chasm and go from dedicated people on Twitter like you and me to the mainstream. And part of that is the product is hard to use. What Jack is coming in, and I think he's going to make it, Movements is a good first step, is how does he make this a mainstream property? And if it does, Twitter is going to be really valuable, but time's going to tell.
Yeah, I think it's Twitter versus Snapchat right now, maybe more than it's Twitter versus Facebook. Facebook is just in a whole different echelon right now. It's up there with your Googles, with your Microsofts, with your, Amazons. I think Microsoft finally gets in FANG. It kind of ruins the nice round acronym, but Microsoft has made its case. Hey, you have to pay attention to us if you care about cloud. Yes, Netflix is in there, Amazon, Facebook, etc. But Twitter, right now, they have the potential for greatness, but they are not on the all-star team.